Hello and welcome. You're watching Money 9. I'm Sakshi Batra, and on this show, we're going to be talking a whole lot of interesting stuff related to your investments in equities, in mutual funds, and we will also do a deep dive into fund of funds as well. But the stock markets are at record levels, and the world of mutual funds is also witnessing a growing investors' interest and consistently rising inflows too. We are also seeing a flurry of new fund offers to tap this surge in the retail investors' presence as well. To talk about more such offerings, the rising interest in the fund of funds, I have with me a very special guest. Joining in with me is Mr. Chintan Haria, Head of Product Development and Strategy at ICICI Prudential AMC, in this edition of Money Masterclass. Thank you so much, Mr. Haria, for taking out time for us and for this very, very interesting conversation. Of course, there's a new fund that you've also launched at ICICI Pru, and we are all eager to know more details about it. But let's start off with the basics first for the benefit of all our viewers. And we are going to do this deep dive into fund of funds to understand a little bit more about what these are, how they operate. So help us, understand how to simply understand the fund of funds.
So, to understand simply fund of funds, we should understand what a mutual fund is. So, I'll start from the very basics itself. As you're all aware, mutual funds are nothing but a collection of units. So, when many investors give us the money as a mutual fund, as an asset management company, we give them the units and we manage the money based on the scheme object. Each scheme is different in its objectives. So, you have the large cap scheme, mid cap scheme, small cap scheme, you have index funds, ETFs. So, there are various kinds of products within the mutual fund bucket. Now, the fund of fund is essentially let's say, another vehicle through which you are allowed to invest into any of these mutual funds. So there will be a dedicated fund of funds. Again, fund of funds can be of different kinds, but to put it very simply, fund of funds is a vehicle which allows you or your money in getting invested in any of these underlying funds, depending on the objective of those fund of funds. So it's simply, let's say, a wrapper on top of the funds which are there. It is a mutual fund itself, the fund of fund, and it invests in the underlying mutual funds.
That's very, very interesting. And, to understand a little bit more as to why would you want to invest in a fund of fund also is a very interesting thing because, everybody of us, we are all invested in mutual funds. Most of our viewers are also quite aware about mutual funds, but fund of funds is fairly new for them. So help us understand if there are also different types of fund of funds to understand a little bit deeper as to what kinds of these of funds are available in the market for us to explore.
Yeah, so essentially, fund of fund, as I see it, is creating a solution for the investors who necessarily do not have the expertise to pick and choose which fund is good for them on the underlying. So, should you be investing in large cap at one point of time? Should we be investing in internationals at one point of time? So, a fund of fund essentially demystifies it for the investor. There are various kinds of fund of funds, and at ICICI Prudential Asset Management Company, we have an entire bouquet of fund of funds as well, catering to the requirements of each individual based on his asset allocation. So let's start with, let's say, the ICICI Prudential Asset Allocator Fund of Fund. It is a fund of fund which allows the investors to get their asset allocation right? So the fund of fund will invest in equity and debt based on a model, and then the underlying funds are selected based on the fund manager's expertise as to which fund is better for the investor. So not only how much of your money should go into equity and debt, but also where it should be going in funds is decided by that. So the asset allocator fund of fund solves that problem for investors, and it is a category which is growing interest among investors. The second one is similar to international funds, right? So when
Yeah.
international, we have the ICICI Prudential Global Advantage Fund. Today, it's become, let's say, very fashionable and very, let's say, interesting
It's a
also for
new fad.
investors. But
It's a new fad that everybody wants to invest globally. Everybody wants to go
yes, and
global and, not
which
just get limited to the Indian markets. Yeah.
correct, which is fair as well, right? Because India is just 3% of the global, let's say, market cap. Globally, $105 trillion. India is $3 trillion market cap. So there is a whole world outside which people want to explore, not just in terms of tourism. We've seen Indian tourism also growing. So many investors want, I mean, many of us do want to go abroad and see many of the places. Similarly, we also want to invest in the companies abroad. And while many of those companies which are abroad are listed in India as well through their Indian subsidiaries,
Yes.
why not directly get access to many of these large companies which may not be listed in India? So that's an interesting trend, and it should be a part of allocation as well. But again, there the question comes: which country should I invest? How much should I invest? Should I invest in Asia? Should I invest in America? Should I invest in Japan? Should I invest in emerging markets? Should I invest in developed markets? All these questions will come to your mind. To solve all these questions, we have the ICICI Prudential Global Advantage Fund of Fund. It's a simple structure, a fund of fund which invests in Indian domestic mutual funds which invest outside, right? So you don't have to worry about how much percentage of your money should go in America, Japan. We are taking that call on your behalf, and that's also a solution for those investors who are looking to invest abroad but do not have the expertise to figure out how. And that's where the international fund of funds come into play. Now, fund of funds, like I explained, can be asset allocator, global advantage. They can also be individual fund of funds which basically are dedicated towards a single underlying fund. For example, in the case of ETFs and index funds, there are
Yeah.
dedicated fund of funds which allow, because ETFs you need a demat account and trading account. If you don't have a demat account and trading account and you want to participate in the ETF, then funds like ours launch the fund of fund on the ETF to allow those investors who do not have a demat and trading account to participate
Mm.
via the fund of fund into the ETF. So that's one more structure on the fund of funds. There are debt fund of funds as well, which essentially invest in underlying debt funds. So while you may not necessarily know which debt fund to choose, which
Yeah.
duration, which quality of paper, the fund manager does it on your behalf. So you will have the debt funds being underlying part of the fund of funds. So each fund of fund is providing a solution, and I'll just extend it by one more type of fund of fund, which we are very excited about. We've
Yeah.
seen that investors at different points of time do like themes, but the
Yes.
problem is that if an infrastructure theme worked in 2008, they came quite late into that theme. If
Mm.
technology as a theme is working right now, they
Yes.
probably are entering quite late. So to ensure that investors who probably want to invest in themes, and it is the aggressive part of the market, right? It's the more aggressive part of the market for higher risk takers. We have the thematic advantage fund of fund, ICICI Prudential thematic advantage fund of fund, where we are
Okay.
bringing our expertise of picking the sectoral and thematic schemes and blending it in for you. You don't have to worry about which theme to enter when. We are doing it for you in terms of the proportions that we like. So that's
That's
another solution around the fund of fund available for the investor. So like I said, the fund of funds can be of many solutions or many types. Basic about a fund of fund is it is not doing nothing but investing in an underlying fund. Of course, the taxation aspect of it will come to when you ask me the question. But in
yes.
general, fund of fund is a simplified way for you to get the in asset management companies expertise into what is the underlying schemes that you should be ultimately invested in, and that's where each fund of fund in terms of how or what it is doing is important for you to understand.
That's wonderful. You put the entire context for everyone to understand, not just the basic concept of a fund of fund, but also the kind of, variety there exists out there in the world for everyone wanting to take a bite or, take a pie of the kind of funds that there are in the various kind of themes or sectors, the ideas that are getting created, and that may suit very well for individual perspective as well. Now, taking this thing a little further, just wanted to ask you if you could list out a few pros and cons of investing in fund of funds. So all the new investors wanting to enter here can have that clarity before they go ahead.
Sure. So let's look at the pros, which I've already highlighted earlier as well. Many a times we do not necessarily know where to invest, how to invest, and that's where many of these solutions on fund of fund are giving us professional advice and expertise. The biggest pro, as I see it, is that you like thematic investing, you like aggressive investing, but you do not want to necessarily keep following the market. You may be doing whatever you are doing in terms of your life, but you want to allocate certain money towards sectoral thematic investing and forget about it. The biggest advantage that fund of funds carry is that while the fund of fund where you are investing in keeps moving between sectors and themes, there is no impact on you in terms of taxation because you are not redeeming the units, you are not moving the units, you are invested where you are. So the underlying funds keep on changing. You don't have, there's no taxability for you, there is no exit loads for you. So it's a wonderful vehicle for you to keep compounding your money in terms of the growth that happens with the Indian economy if the fund manager gets it right in terms of the sectors and themes. That's the biggest advantage as we see it. Second is it's as simple to invest in a fund of fund. You don't need a demat and trading account. In the case of, let's say, an ETF, you will need a demat and trading account, but in a fund of fund, you don't. need a demat and trading account. If I have to see in terms of, let's say, so to say, a negative about fund of funds, which
Yeah.
people perceive it as negative, but I'll try to dispel that myth as well.
Okay.
Fund of funds in India, the way they are taxed. So if a fund of fund is investing in equity or in index funds, etc., it is, or in debt, wherever it is investing in a multiple, it is taxed as debt taxation. So if you
Okay.
invest in an equity fund, you get equity tax, or you get equity
Yes.
taxation, which is 10% long term and 15% short
The
term.
capital gains
If you
tax.
invest in a fund of fund, right, it is taxed as debt taxation. It is not treated as equity taxation. The only exception to that is that if the fund of fund is investing into a dedicated ETF with minimum 95% into that ETF, or
Mm-hmm.
a pack of ETFs, which are Indian ETFs, it will be taxed as equity. So that's the only dispensation that is there in terms of taxation. So from a investor perspective, investors may need to know that in a fund of fund which you are investing, your horizon has to be more than 3 years. So these are not tactical investments. Fund of funds, and each of the fund of fund which I mentioned, be it the Global
Yeah.
Advantage which invests internationally, be it the asset allocator, or be it the debt management, it's supposed to be a long term allocation where you don't want to take the decision making. You're giving the decision making to the asset management company,
Yeah.
and you basically allow that to run. And because now equity taxation is also not 0% as it used to be before 2018, the
Mm-hmm.
difference between the taxation has come down sharply. So I don't think this is a very big negative from a fund of fund perspective, but it is something which investors should keep in mind from how the fund of funds are taxed. And apart from that, of course, there are many investors who want to invest in the underlying scheme itself and pick and choose. They
Yeah.
will not get to do that in the fund of fund, because in the fund of fund, the fund manager is taking that onus. But on an overall basis, for most investors, I would believe, and first time investors for sure, the
Yes.
funds like asset allocator fund of fund are a beautiful start to the career, because what will happen is when equity markets are cheap, like March 2020, the asset allocator fund of fund would be higher in equity, and then as the markets keep rising higher, it will be lower in equity, because it is basically moving between debt, equity, and gold for the investor. So you're getting basically debt, equity, gold in one bucket without you having to worry how much of your percentage should be where. And that's the beauty of fund of funds.
Exactly. And, I was coming to that only. You've answered my next question, a part of that in your last comments. I was coming to that for a first time investor, because you've talked about so many kinds of, fund of funds available in the market. Where should one head off first? And, what should one start off with? And you did say that the asset allocation fund of fund is perhaps the best way to start off with, because there is a lot of difficulty that first time investors feel about how do I diversify my portfolio, how do I ensure how much do I have to invest in equity or debt or gold, and how do I get that thing. So by investing in a fund of fund, especially the asset allocation, one can definitely get that. What are the other options that you suggest first time investors, already having some plan in mind that I am going to be investing for particular goals in my life? How should they go ahead? Is it advisable to have two or three fund of funds also in somebody's portfolio?
So I would say that if you have the asset allocator fund of fund, you basically taken care of your longer term requirements of being invested in the right proportion, in the right manner, and in the right place as far as your investments are concerned. But yes, if you want that kicker or alpha kicker or higher return as well, the younger you are, the more risk taking ability you would have, the lesser responsibilities you will have. Then you can look at the thematic advantage fund of fund as well, where you are basically taking sectoral bets via the thematic advantage fund of fund. You get
Mm.
slightly higher returns, and of course higher returns normally come with a higher risk as well. So there will be slight volatility, but in the end you may end up getting higher returns if the fund manager gets the calls right on the underlying. So
Yeah.
from that perspective, you don't need too many fund of funds, but yes, you can potentially have the four which I spoke of, and I would like to add one, which is essentially the gold fund of fund, which allows you to get exposure to gold ETFs. So essentially gold ETFs, the gold fund of fund feeds into. That also is something which should be a part of your financial investment, because it helps you de-risk yourself from the asset classes of equity and debt. And normally when
Mm.
equity and debt both go through a turmoil because of a financial crisis, the gold can help you, stabilize your overall portfolio. So between these five, which is international investing, pure debt, asset allocation, and thematic advantage along with gold, I think you have the entire bouquet. Beyond this, as a first time investor, you may not necessarily need much. And like I said, you can do systematic investment plans in these as well. So that's also another advantage which you get with the fund of funds, where you can slowly but surely keep accumulating units over a period of time through investing monthly or weekly, as the case may be, and whatever is allowed.
Well, I'm sure this is very exciting and interesting for all our investors out there and viewers out there. But what's even more, interesting going to be for them is that there is another scheme that you have come out with. ICICI Pru AMC has launched the ICICI Pru Alpha Low Volume 30 ETF FOF, which is an open-ended fund of funds scheme investing in the ICICI Pru Alpha Low Volume 30 ETFs. So help us understand for all those investors still looking out for any new kind of options of fund of funds, how is this going to be, what is the kind of offering, what are the benefits one actually going to be seeking out if they want to explore this option? And this is open until September 15th. You still have some time to go and invest in this scheme too.
So the ICICI Prudential Alpha Low Vol 30 ETF FOF NFO. The name is long, but it is
Yes.
self-explanatory in terms of what it is doing. It is picking up 30 stocks by by basically combining these two factors of alpha and low vol. It is a fund of fund structure, so those investors who do not have a demat account, trading account, do not need to worry. You will get exposure into the underlying ETF, because the money which comes into the fund of fund will go into the ETF, and the ETF will track the index. So ETF will replicate that index, subject to tracking error, essentially, by having those 30 names, which are a combination or picked up from top 150 companies. So top 150 companies, that is top 100 large cap and 50 mid cap companies, are selected. Out of that, you basically shortlist 30 stocks which rank best on alpha and low vol as two factors, and you create the portfolio, and every 6 months you keep rebalancing. So that's what happens in the index, which is replicated by the ETF. And we are bringing this wrapper or fund of fund for those investors who want to do SIPs or who want to invest through the mutual fund FOF route into this smart beta portfolio. So that's essentially what this new fund offer is all about. You can invest with as low as rupees 1,000 in the NFO, and then subsequently also, since it's an open-ended scheme, like you said, you can keep
Yeah.
purchasing and averaging on the way as we move along. It being an equity scheme, again, you need to have a long-term horizon. It is
Hmm.
not a tactical scheme, because the alpha and low vol as factors for longer periods of time do well. It is your equity allocation, so it has to fit into your equity asset allocation as well. So keep all these checks and balances in mind. But this is a portfolio which we believe, if you keep accumulating over periods of time, is a good fit for you to create wealth along with the Indian companies growing and along with India's growth.
Absolutely. Well, on that note, I have to ask you one last question as to what is the outlook that you have on the Indian markets? We have seen a stupendous rally so far, and the markets have surprised analysts, market watchers, everyone, because despite the kind of overvaluation that exists, despite the kind of market cap to GDP that is at a 13-year high, the markets are continuing to ride, higher. So, everybody has this one question in mind that, I know that the correction is going to come, but I don't know when. So, what is the best way to approach a market where everybody has this thing on the backdrop, and yet the markets keep on going, surprising everyone?
So the joke is that when everyone thinks a correction will come, it will not come. But when people stop thinking about it, it will come. But on a more serious note, we are seeing valuations, obviously, reaching a level from where people would want to be cautious, and it is not surprising so. But what people should also remember, that a few things about India, that we are coming out of a trough as far as our profitability of our corporates is concerned. For the last 5 years, we've seen demonetization, GST, and COVID, all three impacting the MSME segment, which basically has led to the shrinking of the MSME segment. But the listed players have got market share. And along with all the schemes like PLI, which the government of India is bringing, the
Yeah.
manufacturing sector is also getting a fillip. So, from an Indian GDP context, we are in a Goldilocks scenario wherein everything seems to be good, and what's valuation is also reflecting that. And if the growth continues, then obviously we will see more and more interest from foreigners as well. So it's not just Indians who are buying into India in a big way. Indians have just started now, but foreigners between 20 and today have already picked up 21% of our listed equities, and they continue to do so. India is the largest FDI and FII destination. And so the outlook for India in the next 5 years, if we are moving from $3 trillion to $5 trillion GDP, that will get reflected in the markets. New sectors are getting reflected in. So our outlook is positive on the Indian growth story. As far as markets are concerned, I would suggest that most investors, you are basically will be benefited by having your investments in a smart manner. Start with asset allocator fund of fund, and then thematic advantage you keep adding on to. The core should be asset allocator fund of fund, and then you move around with the additions based on your own risk appetite and your own outlook. But keep the core as asset allocator fund of fund at all points of time. Thank you.
Well, that's wonderful. Thank you so much, Mr. Arya, for all these insights on the markets, the way fund of funds really function, and how do they benefit. And even first-time investors looking out for opportunities, asset allocator fund of fund is definitely a good way to start off with, balancing everything and getting to know that your long-term goals can actually be met through this diversification as well. Thank you so much for all of your insights on the markets too. And it's a pleasure as always to have you on Money Nine with us, and our viewers really benefit from all the insights that you share. And with that,
Thank you.
we wrap up this edition of Money Masterclass for you, but we'll keep getting you such interesting conversations and keep getting you all the expert insights as to how the world of investments is growing, what are the new things that are happening that you should get to know so that your financial planning is at the maximum and the optimum as well too. Thank you so much for tuning in on this edition.